And now it's going up. Hey, everybody, welcome back to the Sustainiacs. I am Michael Vincent, and my guest today is Stuart L. Hart, and maybe you've read some of his stuff. He is a professor in residence at University of Michigan, S.C. Johnson Professor Emeritus at Cornell University, and Distinguished Fellow at University of Vermont. He's also an author, and a book that I was just introduced by Stuart was Beyond Shareholder Primacy, Remaking Capitalism for a Sustainable Future. Hence the Sustainiacs, a sustainable future. And we all know that that goes far beyond just environmental sustainability, right? That goes across the board, the true full global definition of sustainability, if you will. Stuart or Dr. Stewart or Dr. Stu or Dr. Hart, however you want. Hey, you, how are you?
I'm doing well, Michael, and Stu works fine. It's short and sweet.
Fantastic. Stu, is that what it comes down to eventually, is just Stu?
Well, it's the easiest thing to say.
It is. Like I come down to Vince or Vincent is what it comes down to with me.
There you
It's
go.
just yeah, it's the easiest stuff. Easiest stuff. So you're up in Michigan right now, huh? How's the weather right now? Is it good?
It's a little on the chilly side here. I'm in Ann Arbor, Michigan. Yeah, it's a little chilly. Feels like winter, but then again, we hadn't had much until now.
You haven't had much. Well, yeah, and that spells a lot of lake effect. Of course, you're not really in the lake effect area. Sometimes you get it there, but yeah,
A little
a
bit, yeah.
mild beginning to the winter spells lots of snow where I'm from.
Right,
Yeah,
right. Yeah, we talked about that a little bit. Yeah.
yeah,
Yeah.
yeah.
Here, not so much. We're a little shielded from that, but we got the cold now. So first kind of significant cold spell of the year.
Yeah, fantastic, fantastic. And so, but just in time for Christmas, right? So maybe you'll get some white stuff on the
That's
ground,
it.
and it'll look like it should be. But hey, that's not why we're here. We're here to talk about sustainability, and in particular, we're talking really. I think in my mind, it's a deeper dive into the philosophy of how we got here, right? And kind of the you know how did we get to this linear extract, use, toss economy? What were the factors that enabled it to happen? I've always contended that it was really, despite what had happened over the pandemic years and the Suez Canal and those type of stuff, a really fairly successful just-in-time global supply chain helped quite a bit, right? To be able to just extract, use, toss, and efficiently just keep doing that over and over and over. But there's a deeper philosophy and kind of maybe even in my mind, a deviation from what we really were, capitalism should be or could be, right?
Yeah, so in this book, I devote probably the first third of it or so to kind of a historical exploration,
Yeah.
right? Because at least for me personally, maybe starting around 10 years ago or so, I became increasingly motivated to understand how we could have possibly gotten to where we were, as a society, and sort of the way our interpretation of economics and capitalism, how could we have gotten there? That clearly we were, the dials of kind of the world dials, the world dashboard dials were still aggressively headed in the wrong direction. They still are, right? When it
Yeah,
comes
pretty.
to
Yeah,
almost
yeah.
every metric having to do with environmental sustainability, resilience, or inequality, or so forth, we could go down the list. Uh, I had to admit to myself that kind of the form of capitalism we've been practicing now for 30 or 40 years, what I call shareholder primacy capitalism, certainly has lifted billions of people out of poverty, at least the way we define poverty, which is extreme low income. It has done that, right? Over the last 30 or 40 years, particularly in
Sure.
China and India and so forth, but yet has also accelerated the climate crisis, the sixth extinction, and pretty much peak
Right.
inequality, right? It hasn't been like this since the 20s.
Yeah.
So I found myself increasingly, and for me personally, I've been working in this space that we call sustainable business now, for going on 40 years. It wasn't always called sustainable business, but kind of like back in the 80s and 90s. Uh, and we can talk more about that. But I became motivated to understand how we got here, and so that took me back into a deep reading of not only economic history but cultural history, social history, and so forth. And that's the first third of the book. And so I like to start off, this discussion with a somewhat rhetorical but actually factual question, which
Okay.
is the following: uh, What is and you probably know now, because we've talked about this a little bit. What's the world's largest, most profitable, and longest lived multinational corporation in the history of the world? It's actually a factual question, but somewhat rhetorical too. And it's not. The answer is not Standard Oil or General Motors
Or BlackRock.
or BlackRock. It's definitely not the longest. Not the longest, because
No.
it has to be the largest, most profitable, and longest lived.
I'm going to say
Oh,
it has something to do with the British Empire. I'm going to say it has
correct.
something to do
Correct.
with
And the answer is the British East India Company,
yes, yeah, yeah.
founded in the year 1600, which I argue in the book, sort of formed the basis. It is the source code of capitalism. And the British East India Company is a very interesting story. So I've read fairly deeply about the British East India Company, over its nearly 250-year life.
Yeah.
Uh, it at one point accounted for half of all world trade. Half of all
Oh
world trade.
wow. Well,
Uh,
yeah. Okay, I get it. I mean, but yeah, that's. I mean, that's speaking to its power in the beginning and how it influenced the development, right? Because you're talking about like right now, that would be, I mean, astronomically impressive. And
yeah,
it was
exactly.
back in the time it was as well, but it was really more of a groundbreaking impressive, right? I mean, now it'd be market share, market gain from others who also own, but then you know, did anybody even own 5% at that time? You know what I mean? Which is still really, really impressive. But it's it allowed them to influence the development of everybody else who gained market share, right?
Exactly. The
Yeah.
British East India Company and its sister, the Dutch East India Company, right, which was
Ah,
founded 2 years later,
I knew
both with
somehow
very
it was the
similar
Dutch as
DNA,
well.
right? Very similar.
Yeah.
The British East India Company was the world's first joint stock, limited liability corporation financed with private equity.
Oh wow.
Exactly the same kind of corporate structures we have today. I mean, literally identical to the C corp kind of corporate structure, financed with private. Back then, the private equity was called adventure capital.
Yeah. Yeah.
Interestingly
Yeah.
enough, kind of the age of exploration and so forth, right? Adventure capital,
Yeah.
uh,
Well, I mean, it makes sense that that was adventure. Now it's venture, which is still an adventure, but
adventure. Yeah.
yeah.
Now, the Spanish and the Portuguese, prior to that, during the 1500s, were very active, in financing sort of voyages of explore. They called them exploration and discovery. They were really raiding voyages, right down, starting especially down the west coast of Africa, which is where most of the people that we now call the explorers, including Christopher Columbus, really sort of learned their craft. Right, was raiding down the west coast of Africa for.
Was it as the term would imply an aggressive malicious raiding like pillaging type of thing or
Yeah, for raiding for ivory, for precious metals, and then increasingly slaving, taking slaves. That was
that's
certainly
pretty
the
aggressive.
Portuguese and Spanish, but those voyages were all kind of financed by the crown, and whereas the English and the Dutch were the first to really sort of develop a commercial model, right? Kind of what they really used. They were corporations in the truest sense, and were involved in what we might think of as capitalism today, where there were private investors investing for profit, using a very similar model to the Portuguese and the Spanish. The difference being they were ranging much more widely, right? It's kind of starting in the East Indies, where the Dutch came to dominate the Spice Islands. Sort of the English lost there and focused their attention on India. And
Mm.
initially, of course, they were because India was a far more sophisticated and developed society than England. That in the year 1600, India accounted for probably 25% of world manufacturing, China another 25%, and England was like 2 or 3 million people and was basically negligible. It was a tiny backwater, right, in the
See
year
that
1600.
really, it's really interesting to think that, because we've been kind of led to believe our whole lives that it was the exact opposite. Like the colonization, it, you know, people don't understand what that term actually means. It's not a whole lot of really good things that are connotated out of the colonization, but that they were really the backwater. It wasn't like you
Totally.
said. It was the exact opposite. India was thriving and just rocking it
100
on the
million
world
people in the year
stage.
1600, approximately 100 million people, accounting for 25% of the world's manufacturing, the garment center of the world, right? I mean, it was really the Indians that produced most of the kind of the types of textiles and garments that we know of today, ginghams and denims. And so those all came from India.
Oh
And
wow.
initially, the British East India Company was basically buying and importing those to sell back in England because England didn't make anything, right? At least didn't make any things of that quality.
Yeah.
But over time, and especially as the first industrial revolution gained literally steam, right, as the steam engine came into being and then was applied to textile manufacturing, increasingly the East India Company became an agent for putting those very same kind of producers and artisans in India out of business and using India simply as a platform for producing raw cotton to bring back to England. Right? That was mercantilism. Right? The idea is you don't want to buy mercantilism. You don't want to buy finished product. You want to extract raw material as cheaply as you can, preferably for free. Bring it back, to your country, produce, and then sell finished product back to that very same country that you
So
extracted from.
so so Stu, if I'm understanding this right, in my mind, it comes down to the value chain, right? It used to be condensed really nicely, and those who were producing, et cetera, were able to have a very good uh, life
They
as
were
far
domestic. We think
as
of them
wealth
as
as
domestic economies.
they were domestic economies, and
And there was
then
some long distance trading, but it wasn't of this sort.
right, but long distance trading is fine. International commerce and everything is great, but when you start saying, okay, we're going to take this large portion of this value of this product and extract it and put it here, that's where the disintegration of the original economy falls,
That's
right?
when everything changes. That's when
Yeah.
everything changes. And over that period of 240 years or so, there are various estimates, but some of the probably maybe the central tendency estimate is that over that period of time, the British East India Company extracted in today's dollars between 45 and 50 trillion dollars of wealth
Just out of India.
out of India, out of India, such that by 1840 or so, India had become impoverished. That people were those industries were bankrupted. Entire populations were made destitute, and India became simply a raw material sourcing platform. Railroads were built to bring raw materials out. That's largely why the British built the railroad system, was to
Yeah.
extract raw materials.
Yeah, it's just
They had
supply
a
chains.
250,000 person private army to enforce their will, and that was the business model. The business model was extraction, subjugation, enslavement where necessary, and then sort of externalization. Using other countries as dumping grounds where necessary.
Mm.
And
And
that
so,
really was
what
the
was
source code.
the motivation was just
Pure
greed of
profit,
wealth? Just
pure profit for the investors. Right? It was the source code of capitalism and shareholder primacy. Was that model of mercantilist? The British East India Company as sort of the iconic example of that. Right? Kind of that was the source code. It's it. Many kind of attribute it or trace it back. Maybe the first example of it being the island of Madeira, but I'd prefer to use the British East India Company because it has the kind of the full-fledged version of this, right? Because the island of Madeira basically was a mini version of this, where over time it was stripped of all of its trees, and it just became the only thing that you could do then is make wine.
Yeah,
And then
which is
a long
okay.
period of
That's
time,
all right.
it was turned into the cotton plantation capital, right? Initially, it was forested, and there were great resources, that could be accessed for shipbuilding and so forth. That was eventually all cut over. Then it was discovered it was a particularly great place to grow cotton, and using slaves to grow it. That was the kind of model that spread then to the Caribbean and ultimately to the New World. And then
Yeah,
basically the
yeah. The
soil.
Americas, the colony, the U.S. colonies were really the first of the attempt to colonize the United States, the same as India. They did hundreds of years earlier, right?
Right. So the British East India Company took the model in India, right, and brought it to the New World. It was the British East India Company. I mean, the Americas were settled by corporations. At least the British parts of the Americas were settled by corporations like the Massachusetts Bay Company or the Virginia Company or the British East India Company, which had a major footprint in America, literally, right? So it was really British East India Company tea that got thrown overboard during the Boston Tea Party. That
Yeah,
was
yeah, yeah,
that was the British East India Company, not because they were trying to, charge exorbitant prices, but rather because they were going to literally dump the tea on the New England market to bankrupt American merchants.
yeah.
And
No. It
the
was
American merchants
taxes,
didn't like that
Stuart.
very
You're
much.
wrong, Stu. It was taxes.
Well, I mean, there was certainly the taxation part of it too, right? That
Yeah,
The American colonists didn't like the taxation either.
sure.
But in this particular case, the East India Company was there to dump tea cheap, right? To basically to put asunder any attempt by
Yeah,
Americans to stand up their own industries, because that isn't what the British wanted. They wanted to extract raw materials and sell finished products back.
yeah. I find it interesting that the way you're taught how these things go and the common understandings of the different events and like you always think that well, you don't always think, but it was kind of the motivations and the impacts that occurred within India and within Madeira and even the early United States, et cetera. Those motivations are covered up with things like, well, it was religious persecution, so the Pilgrims came to the United States, right? And that was the whole thing, and it was taxation without representation. That was just what it was. But these were they're kind of adopted causes, right? For other
Yeah,
motivations, if you will, which
yeah.
occurs even in modern day. Fast forward into the United States with the Civil War in the United States, right? There was starts to that and then adopted kind of more ethical reasons for it, right? That just became adopted afterwards.
Right. You can kind of ascribe larger meanings to kind of smaller, what are really kind of cutouts. So
Yeah,
so in a lot of ways, the kind of the Pilgrims and the religious persecution thing, in New England was only one small, right? That was not representative of the entire
yeah.
settlement.
It was true. While being true, it wasn't the entire
No,
motivation.
no,
Yeah,
it was true of the Massachusetts Bay Colony,
yeah, yeah.
but certainly not the rest of, the Virginia Company was not motivated that way.
Yeah, exactly.
Right?
That had nothing to do with
Had
it.
nothing to do with it. So yes, and taxation without representation was certainly part of the logic, But I think the bigger logic was the extent to which the British were trying to prevent the colonists developing their own kind of business and industry, which included land speculation, for example, like the British after the French and Indian War shut off the American colonists from from taking Indian land west of the Appalachians, and a lot of the founders didn't like that very much. Like George Washington was a land speculator, right? And the fact that the British did that really really angered him and others, right? So much of it had to do with the British preventing kind of the development that the colonists sought to undertake. So a lot of the revolution was fought to throw, yes, certainly to throw off the shackles of the king, but mostly to throw off the shackles of the corporations. It was a rebellion against large corporations, and a lot of the founders were extremely well-read people, right? And especially the Virginia planters, right? Like well, maybe not Washington so much, but Jefferson and Madison and others, were intellectuals, and they could afford to be because they ran slave plantations, and
Yeah.
so they were able to lead lives of kind of luxury and fulfillment, developing huge libraries, and so they were extremely well read and sophisticated people, and they read all of the classic literature, from Roman times and Greece, as well as the Enlightenment uh, kind of literature that was just coming about at the time, in the
Yeah.
1600s and 1700s, and were hugely influenced by that, right? So certainly they read, the classics from, they like Jefferson's library was filled with the works of Socrates and Plutarch and Epicurus and and
Yeah.
Cicero and Seneca, and then of course also during the Enlightenment, Locke and Spinoza and Hume and Bacon, uh, and perhaps, at least as far as our session today goes, Adam Smith, right? Hugely influential
Right.
for the founders, right? Hughtily influential. The
But
classic works were, they were influenced heavily by the writings about virtue, right? And so, for example, the phrase "the pursuit of happiness" comes from classical Greek and Roman philosophy. That
right. Yeah. Yeah. I mean, that's so. I mean, and I know we're getting there, but it's like, okay, you could see one tact of where things are going and how things got this unbridled capitalism, right? This capitalism without purpose or whatever you want to just wealth for the sake of getting wealth, which isn't right, but and leads to all kinds of bad things. Obviously, we're living through a lot of those now, and people lived through history through a lot of those bad impacts, those negative impacts on their society, etc. So if these guys are, these forefathers, et cetera, are sitting around, I mean, really filling themselves with stuff which I would think would really feed towards your ethos and being a virtuous capitalist and understanding and having lived through the oppression of the king or the corporation, which really they weren't much separated, right? I mean, the government and was really the primary stakeholder of the capitalistic corporations, right? So they really weren't
along
much
with private
separated.
investors, but yeah,
Yeah, yeah,
it
along
was
with
the
private investors,
vehicle
but
it
yeah,
was the vehicle for colonizing.
yeah, the vehicle. So where did it go astray? How could you sit there and be doing these things and not be impacted by the virtues that you're studying and believe in?
Well, I think they were heavily influenced, right? So if you think about the early years of the Republic post-revolution, kind of the drafting of first the Declaration of Independence and then ultimately the Constitution, both heavily influenced by classical thinking, for sure. And the idea of virtue, sort of pervaded all of it, right? And Adam Smith's thinking especially, right? Like, I mean, I think it's important in terms of our discussion about capitalism to realize Adam Smith was certainly not the father of capitalism. You know, if the source code for capitalism was the British East India Company and the mercantilist project, Adam Smith, was reviled by that, right? It revolted him. He was in fact one of the first anti-corporate activists, right? He detested the British East India Company and wrote negatively about it. Thought it was a huge mistake for England to colonize that way. He was anti-slavery from the very beginning. He thought, the opening up of the New World was the greatest thing that could have happened, but was highly critical of the way the British went about it. Uh, he railed against the idea of extracting wealth, right? That in his view, a business should be run to generate a profit, but that profit should be reinvested in the business in order to hire more people and create more good for the common good. He was motivated by that business people should behave with virtue, right? Adam Smith also knew the classics. And virtue, from classical times didn't mean, just sort of narrow probity like it might now, that it meant it was a way of living. It was a philosophy of living. And virtue meant that you behaved in such a way that you would, the term Adam Smith used was that you would be lovely. And what that meant was worthy of being loved. Not that you do it for fame or fortune or being admired, but rather that your behavior makes you worthy of being loved by others. That virtue meant behaving for the common and public good. That as a business person, it should be about creating mutual value, that it's about reciprocity, right? That was really the whole message. And the market economy ideas in the Wealth of Nations are subversive to mercantilism when you think about it. Mercantilist corporations are monopolies. They're granted, they're charters granted by the crown for specific geographies and commodities, and it's a monopoly grant.
Yeah,
And Adam
without
Smith,
consent of the grounds or society that you've been chartered for.
exactly. So Adam Smith just was appalled by the idea of monopolies, right? And so his whole theory was based on market economy, is based on competition, right? And so it's entirely subversive to the way in which the original capitalism was being committed.
But it's also, I guess, virtuous competition, right?
Exactly. That if I mean, I become increasingly convinced now, having kind of read a lot of that work, that if business people uniformly behaved with virtue as the classical authors intended it, then the invisible hand probably really would work.
Wow, wow. That I mean, that's so we, I told you I studied Alfred North Whitehead, and that's an
Yeah,
exact. I mean, that's just a different way of saying, what he, my favorite from him, that the society is only as great as the importance its men and women of business place on their contributions, right? That's exact same thing, right?
yeah,
Is what you're saying there?
yeah.
Yeah.
And so the colonists took all that very seriously. So when in the early days of the Republic, they put corporations back in a box, right? In other words, it's the reason why today in the United States corporations can only be incorporated by states, right? That they wanted to prevent the possibility of national companies from ever happening again, because that was part of the reason the revolution was fought, to throw off the shackles of these national companies that the English created, right? They were chartered companies by the crown. So today, even though, and in the early days of the Republic, there were also lots of other controls, like a corporation could only do business in one state, be chartered by a state, only do business in one state for a defined period of time for a specific public purpose. So,
Oh wow.
the founders were they put corporations back in a box. Now, that's not to say that, other forms of business weren't exploitative, because, for example, as slavery grew in the South and moved from the Virginias and the Carolinas after the Louisiana Purchase and became dominated by cotton, then, the slave plantations just absolutely exploded, right? In terms, at one point by 1840 or so, the southern states in the United States accounted for 80% of the world's raw cotton production. It's what fueled the British textile mills as well as the growing textile mills in the North. But those slave plantations were sole proprietorships. They weren't organized as corporations. So it's
I
not to
got you.
excuse any of that. But my point is that corporations that had become vehicles of, kind of national, uh, sort of national colonization were basically prohibited in the early part of the Republic. And at least in the North, those companies, even though those textile mills maybe were fueled by cotton grown on slave plantations, they were not monopolies, right? They were there was an assurance that there was going to be a market economy with competition, a la Adam Smith in the early days of the Republic. Now all that got eroded away over the course of the 19th century as technology improved, as you had railroads, you had the emergence of fossil fuels, the oil industry, the steel industry, electricity, automobiles. All of those controls, as the corporations got bigger, got eroded away because they had sophisticated lawyers who basically could take them down. So by the late 19th century, most of those controls of corporations had been eroded away. And once again, we were back to the source code during the Gilded Age. Large monopolistic corporations that extracted wealth and became concentrated, back to the source code.
So okay, so very interesting stuff, and we've got so much to go down. But a quick rabbit hole. Maybe it's not a very quick rabbit hole at all. Maybe a huge and long labyrinth of rabbit holes. But if this was such an important impact, which I'm not questioning that whether it was or not, or point of contention with the founding fathers, why wasn't there more controls about this in you know the original Bill of Rights and the original Declaration.
Well, that's probably a bone of contention. My interpretation of that is because they were highly conflicted individuals, uh, extremely intellectually sophisticated, but also highly conflicted, maybe verging on being hypocrites. People like Washington and Jefferson were plantation owners,
Right.
and so while they intellectually took positions, especially Jefferson, that slavery was an inherent violation of man's natural rights, right? Granted, the idea of natural rights, right, were a pervasive idea at the time, and that slavery, in Jefferson's view, was a violation of that. And he advocated for things like abolishment of the slave trade,
Right.
but he very carefully distinguished between that and abolishing slavery as practiced in the Americas,
Mm.
because he did very well, with that the institution of slavery would continue, as did a lot of the founders. So that, combined with the fact that, again, by the 1800s, that slave grown cotton accounted for 80% of world production of raw cotton, probably 90% plus of exports by the fledgling America. So it was hugely important to the American economy, right? So the politicians were kind of conflicted by that, right? That on the one hand they're maybe intellectually revolted by it. On the other hand, it's a simple reality that without it, America would be sunk economically.
Right, right. It's also interesting and that's a great explanation. It's also interesting to me that you said that, originally these shackles that they threw off from the corporations, but they put corporations back in a box, which is in a sense to say try and shackle the corporations from being able to do the opposite. Um, you said it was for a specific period of time for a specific purpose that was beneficial to the society, right? When did that fall away?
As I
When
was
did
saying, over the course of, that was pretty much the way it was up until the Civil War. But post Civil War, that's when things began to change, with the growth of the railroads in particular. That the railroads changed everything because they required massive capital investment and land, right? That the government gave massive land grants to railroad entrepreneurs, millions and millions of acres, right? Literally in the form of land grants, right? So it was like one of the biggest wealth giveaways in history, right? Land that was basically taken from the natives and then just gifted to the railroad entrepreneurs.
Yeah.
It was just, when you think about the scale of it, it's almost unimaginable. So
Mm.
yeah, the English had enclosure laws, right, in England, like in the 15 and 1600s, in order to kick peasant, farmers post feudalism, off common lands and force them into factories. But
Wow.
the giveaway of the American commons, which was land kind of now taken from the native populations, was on a scale, probably hundreds of times more than the enclosure process in England. So the railroad companies became enormous, right? They required massive capital investment, and that when you're that big and that profitable, you can afford really, really talented lawyers, and sustain kind of cases and campaigns over decades, which is what happened. Then, with the advent of the first industrial revolution, right, and you have now other large corporations, starting in one state, then eroding away the law that you can't hold stock in companies in other states. Get rid of that. Now you can hold stock in companies in other states, and then you're able to get around the idea that you can only be incorporated in one state by forming a trust that allows you to hold multiple companies in multiple states under a trust structure, which is why, today we still, like Teddy Roosevelt talked about, being a trust buster. It's because that was the kind of the governance structure of large multi-state corporations in the late 1800s.
Mm.
Then eventually, the requirement that you could only be incorporated in one state was eroded away. So then you could have just national corporations, but they still referred to them as trusts. That was kind of how that was what they were called. So by the early 1900s, when Teddy Roosevelt became president, uh, the idea that you had to hold a trust in order to own companies in multiple states was already gone. But the term trust had been sort of firmly rooted in people's minds. So they still called large national corporations trusts.
Oh wow. Okay. I had no idea. That's unbelievable. So that takes off. I mean, now corporations are out of the box, right? But then
Exactly.
we're still left with this notion that you could only be incorporated if you were producing something that was good for the society, kind of implied or
And that went
stated
away. That was
directly.
eroded away too.
At the
And
same time, it just went away. I mean, just kind of. I mean, there was
right, the
no.
idea,
Was there a
the,
legal precedence to say, "Hey, this is going to be good for society," and you had to argue that in order to get your corporate, or was it just kind of a
so
known
states began to
kind of
compete with
ethics?
each other for these kind of emerging corporations, right? So the state of Delaware, it's the reason why today the state of Delaware is the incorporation capital of the world. It became the entrepreneurial state when it came to creating corporate legal structures and corporate law that would make it simple for industrial entrepreneurs to incorporate their companies there and grow national companies without a stated public purpose.
Ah, so you didn't. They were the first to say you don't have to have a stated public purpose. Was that the crux,
They were
or
one
was
of the
that
innovators when it came to that. Yeah,
innovators in that
yeah. That you can create a company for any purpose.
any purpose
Any
whatsoever?
purpose, any purpose. And it's important to note, though, that even in the law, kind of the C corp law today, it doesn't. The C corporation law does not say that the corporation is created for the purpose of maximizing profits or shareholder value. It just says that the corporation can be created for any purpose.
Yeah, right. Yeah, it didn't take it to the other extreme. It just said any
Right.
purpose, which then allows it to just be for profits. Right.
Exactly.
Right.
Exactly. Exactly. And so then in addition to that, kind of rights got heaped on large corporations. Like in the 1880s, there was a Supreme Court. I don't know if I'd call it decision. This is controversial too. That essentially gave the right of due process. That was granted to freed slaves. After the Civil War,
Yeah.
to corporations. That was when corporations became people.
Oh wow.
So it's called corporate personhood, which still exists. And then with Citizens United, even more recently, now corporations have First Amendment rights.
Yeah, which is crazy to think about that. But yeah.
So that
Um,
was a gradual process that just changed the rules of the game entirely, such that we ended up, with large, dominant, monopolistic, extractive companies again. But this time around, these industrial corporations did produce things that actually benefited people's lives in significant ways, right? I mean, it brought us, even though today we're living the consequences, it brought us oil and gas. It brought us automobiles. It brought us electricity. It brought us, mass consumer goods. So, I mean, there were benefits, right, to the common person that really weren't there the first time around with mercantilism, which was
well,
almost
yeah, for sure.
entirely extractive, right? So,
Yeah.
that loop, right, kind of produced a version of source code capitalism that at least did provide some good, positive things for people, for sure, right? It did for sure, and created a lot more jobs in the process, right? Kind of factory jobs. Now, they were also exploitative jobs, and that produced the union movement and so forth, and
Sure.
and the antitrust movement, such that by the 20s, teens 20s, and into the 30s with the stock market crash and Great Depression, there was a huge movement against, once again, these large corporations, such that it shifted the game again. This is the second reformation that I talk about in my book, right? The first one being kind of the the kind of the market economy revolution in the early uh, 1800s, right? Driven by the American colonists, Adam Smith, and so forth. Second one being uh, the New Deal, and the logic of the New Deal in the 30s, where there was one book in particular that took, kind of an iconic place in the pantheon as well, which nobody's really even remembers today. And it was a book by Adolph Burley and Gardner Means with the title The Modern Corporation and Private Property. Now,
Okay.
I would hazard to guess that that's not a familiar book.
No,
But
not
it
with me.
was
It isn't.
published in 1933. Adolph Burley was a Columbia law professor. Gardner Means was a Harvard economist, and they were commissioned to write this book. They started in the late 20s before the crash, and continued on. The book ultimately came out in 1933, just as Roosevelt was being elected. Both of them ended up in the Roosevelt administration. But that was the time frame in which they were writing this book, and it was hailed at the time as a book as important as The Wealth of Nations
Oh,
by
wow.
Adam Smith.
Okay.
And it was important because what it did was put forward a whole philosophy of capitalism and management that ended up taking root and forming the basis for how capitalism got committed, starting in the 30s, but certainly carrying on in the post-war years, in the 50s and 60s and into the 70s. And it was as follows. In that book, they observed that for the first time in human history, in the by the 1920s and 30s, we had large corporations in America, right, that were quote owned by hundreds of thousands of distributed small shareholders, right? Because we had a public equity market which crashed in 1929, but
Yeah,
and
exactly.
and ended up impoverishing a lot of small shareholders. But it was unique in the world, like Europe and Japan and other, those were still largely banking dominated economies, where corporations were debt financed by banks. They didn't have well developed public equity stock market kind of systems, whereas America did, right? And so it's the first time in human history you had these large industrial corporations that were quote owned by distributed hundreds of thousands of small shareholders and managed by professional managers, not by the tycoons that started them, because by then the tycoons that started them had passed from the scene. And the tycoons themselves are the ones that created business schools. And they created business schools for two reasons, because business schools were created mostly in the early 20th century because tycoons needed professionally trained managers to run these increasingly large bureaucratic corporations, number one. But number two, they also needed professional managers that, could be shown to have a set of ethics. Because, if they were going to continue to exist, their companies had to take on at least an air of public legitimacy in order to deal with the antitrust movement. And so the early business schools, a big part of the curriculum was back to the classics, right? The idea of virtue, the idea of the common good, the idea of running companies for that purpose. That was a big part of the early business school curriculum, along with technical training like scientific management and so forth. But that was the original impetus for business education in the teens and 20s when it first started. And so by the 30s, you had large corporations now that were run by these people, right? The professional manager, not the tycoons anymore, and the companies owned by hundreds of thousands of small shareholders. And they viewed that as a positive evolution, human development, because they viewed it as an opportunity for the first time in human history, these companies could be run for the common good, not just, kind of run for the personal kind of wealth building of the tycoons. They viewed it, and they call that managerial capitalism. They called it manager. And when you think about it, it's exactly the opposite of what came forward in the 70s here that brought us shareholder primacy capitalism, where the academic economists posited things like agency theory, right, which said, well, managers are really just selfish, self-interested people that are out to feather their own nest, and they don't have the interest of the shareholders certainly, but the larger interest of the company in mind. They're just out for themselves, kind of premised on the assumptions about economic man and so forth from neoclassical economics. And so the result of that is that if companies are going to be run properly, then we have to control the managers because they're just in it for themselves, which means, senior people, senior executives, we need to tie their comp to stock price. So it's why we got, kind of executive compensation tied to stock options and so forth, which now kind of brings us,
Yeah.
CEO compensation that's 350 times the average worker. And why we have, kind of the idea of short term driving the stock price in the short term becomes the mantra for running the company. Well, Burley and Means, kind of professed exactly the opposite, right? Their view was that having professionally trained managers behaving with virtue could get us companies that could be run for the common good. It's exactly the opposite.
It's a
Different
good
set of
premise.
assumptions, and then you get a different capitalism.
Yeah, I mean the premise of their book is fantastic,
Yeah,
right?
yeah. Yeah, and coming out of the Second World War, that really was how corporations were run. Now, granted, they had major blind spots, like environment, like women, like race, but I was a child, I'm an old guy, right? So I was born in 1952. My father, kind of served in World War II, never would have gone to college without the GI Bill. Uh, Went to college, got a job at GE, right? Classic example of such a company. The IBMs, the GEs, the General Motors, all were run with the idea. They called it, in fact, welfare capitalism. The CEO of GM and IBM called the way they ran the companies in the post-war years welfare capitalism, and the purpose was to build the middle class, right? And that's why we build a middle class, right? That now, granted, there were a set of conditions that allowed American companies to behave that way because Europe and Japan were in shambles after the Second World War, and there was little competition. So they could do things like, provide pensions and health care and so forth. But that all happened after the Second World War, and the companies were, it was all about building promotion ladders and competitive pay, and that's how we grew the middle class, and companies got rewarded for that. Capitalism was run with a very different operating system and objective function in the 50s and 60s, and it ended up going to an extreme, right, such that they ended up becoming these diversified conglomerates in order to have more, be able to hire more people and have more promotion ladders and so forth, so that it got out of control in the 70s. And you also had the Arab oil embargo and Watergate and
Oh
stagflation,
yeah,
and so the conglomerates sort of became these top-heavy bureaucracies, and so the whole thing kind of caved in. That's what opened the door to Milton Friedman and the Chicago economics people and the neoliberals in the 70s to bring the agency theory, efficient markets way of thinking that took everything over in the 80s, right? That brought us shareholder primacy capitalism that we're still living with today.
we are. Yes, we are. And so that history is fantastic, and we've been barely scratching the surface of any of it, right? I mean, this is you're like condensing a PhD into, you know 47 minutes so far. Are we
Sorry to
gonna
go on, but I think
no, no, no. I love it. This is fantastic. This is absolutely fantastic because I'd love to go back and just dig into each development of capitalism. Right? I mean, you're talking about managerial capitalism and shareholder primacy capitalism and welfare capitalism and all these different things that occurred, and breaking them down into different eras of capitalism, if you will, that were enabled by different things and the reactions to the former. Right?
exactly, exactly.
In trying to get to the latter. We never seem to get to the latter because something seems to bastardize it, right?
Yeah, we've had these, wild swings over time. To me, learning this history, I found heartening, right, and hopeful, because I think there's a tendency on the part of people especially business people and business students, to be ahistoric, right, to assume that the way it is now is the way it's always been, the way it always will be, and it's just simply not true, right? There have been these wild swings when capitalism has, kind of run amok, but then been pulled back, right? There have been eras of reformation where capitalism has been pulled back, and it's sort of partial reformation, and but then only to have it revert to source code again, right? And then to run to an extreme again, like the era we're living in right now, with a counter movement coming in, and then a time where it's pulled back again. And I believe we are in one of those times right now, right? Kind of the sustainability movement, the corporate social responsibility movement, the conscious capitalism movement, whatever buzzword you want to use. These are all part of the counter movement against the excesses of shareholder primacy capitalism.
Yeah,
And
I
we're
would
in the
contend that
midst
you're
of
right.
that.
Not
We're
that you
living it
need,
right now.
yeah, not that you need my validation, but I agree 100%. I've been kind of trying to argue that and articulate it for a number of years, and I'm not as eloquent a speaker or as deep a thinker as you are. But yeah, I agree 100% exactly what you're saying. It's great. We have an opportunity right now, and I talk about an opportunity to really change um, the distribution of wealth to uplift everybody, including those who already have.
Oh yeah,
is some of
yeah,
the things
yeah.
that to be against it doesn't make any sense to me, because even if you're one of the elite or whatever, one of the the tycoons, or you're in this area, lifting everybody only helps, right? It doesn't deteriorate power, it doesn't deteriorate wealth, it encourages
It
everything, right?
deteriorates power.
Does it though?
Yeah, yeah, yeah. Because when everyone is better off, then a small minority of people can't control everything. Because we've had periods when it's like that, right? And so I think all all oligopolists are cut from a particular cloth,
Yeah. So,
and
so what is all right? So what if you? I mean, we can get into this if you want to or not, but can we? What if you argued the validity of that power desire? Right? Is it?
I think that's a big part of it. It's a big
Right? I
part of it
mean,
because you're absolutely right that as far as the quality of life for everyone, quality of life is far better when wealth is more evenly distributed. I'm not saying equality. I mean, they're always going
yeah,
to
no,
there
that's
need to
different.
be differences, obviously, because not
Yeah,
everyone's the same, and not everyone deserves the same, right? So I mean, there
yeah,
are
exactly.
I'm a big believer in innovation and earning it, but
Yeah,
the idea of
I'm
having
not arguing for, like, somebody's going to think I'm arguing for socialism or communism or something. That's not
no,
it at
no,
all.
I
It's not
no,
what I'm talking about at all.
I'm still very much a capitalist,
Yeah, me
but
too, 100%.
recognizing that capitalism can be run in a lot of different ways, and that
Well,
we have
virtuous capitalism is what we're arguing for, right?
exactly, exactly, and that we're in one of those periods now where we have a chance, in my view, to finally fix it once and for all. I think of
I
it as
agree. I have the same exact. That's my thoughts
I
exactly.
think we have a
But don't you have to dismantle the lie of or the deception of power, of desire of power?
you have to somehow be able to control that, and prevent it from rearing its head again, right? That
Yeah.
uh, and I think a lot of it has, I think of it as we need CRISPR for capitalism, right? That there are some really really positive genes. There's some good genes when it comes to capitalism, that have always been there. Kind of things like uh, you know uh, allocation of investment in goods through markets rather than central planning, uh, private ownership, in economic incentives and individual incentives, rule of law and sanctity of contracts. I think these are all really really good parts. Those are the good genes of capitalism.
Yeah.
The bad genes are things like that part of this is extracting raw materials and resources, as cheaply as possible, preferably just taking them.
Yeah. Yeah.
That part of this is subjugation of peoples, and that labor, really the objective is to minimize what we pay the very people that produce the goods and services. That labor is a cost is an absolute absurdity, right? And that gene needs to be edited out. Labor, people are an asset, not but our very accounting system says that people are a cost,
Yes. Yeah.
which is
Absolutely.
utterly absurd. But it's within our power to change that, right?
Yeah.
We
They're an asset.
they're an asset. They're absolutely an asset and should be treated as such, right? And then the
And the only
idea that
time you ever hear that is when somebody's recruiting someone.
exactly, it's just rhetoric. It's rhetoric because our finance and accounting systems say it's a cost, and as
Oh,
long
well,
as
and
that
we're seeing it right now. I mean, like, there's in the logistics space right now. Supposedly, the Great Recession of freight recession is over, which there really wasn't one. It was a correction of a ridiculous, anomalous high created by the pandemic and our reactions to it. Right, um, and still, there's people being just the costs are too high, so people are being just cut. They're just that
exactly.
that's gone. Investment in physical assets is up. Getting rid of people is also up, which is that's a result of exactly what you're talking, the really almost archaic accounting system that people are
Yeah. And it's
the
very much
cause.
within our power to change that, right? We can edit that out, right? The idea that it's a good thing to externalize negative impacts, kind of find dumping grounds for things where nobody cares, or at least where there's no enforced regulation, and dump all your crap there.
Or
Now,
you
that
can
that
spin it.
that we have to edit that out, right? And we see the beginnings of that with things like CSRD in Europe, and then the concept of scope 3. These are all, I think, very positive developments that would cause us to edit those kind of genes out, right? That and and as I looked at things like during the era of welfare capitalism, where companies got, where there were rewards for building promotion ladders and building the middle class, and you look at public equity markets today, and I talk about this in my book, right? I have a chapter called Redefining the Meaning of Value, that the public equity markets in particular today are now almost purely trading markets. Like 30 or 40 years ago, public equity markets like the New York Stock Exchange, were, probably 70% trading, but 30% was new investment, right? Was IPOs and so forth, kind of new issues. Now, with financial deregulation in the 80s and 90s, and the just the explosion of derivatives markets, trading is 99% plus of what public equity markets do now. New investment less than 1%. And when you add in share buybacks, right? So like after the Great Depression, share buybacks purely to drive up the stock price were basically prohibited by the SEC. But beginning in 1983, which was kind of the start of shareholder primacy, it was one of the contributing factors. It was given the green light again. And so share buybacks became one of the most, kind of the most favorite moves by CEOs driven to goose the stock price. You buy back your own shares to, to kind of to reduce the number of shares outstanding, and that drives up the short-term stock price, right? So, and if you as CEO are compensated based on the share price, then you're feathering your own nest too, right? And that's part of the shareholder primacy machine. Well, now today, share buybacks in America, at least in American public equity markets, are in the vicinity of $1 trillion a year. $1 trillion a year in share buybacks. New issues, IPOs, SPACs, and so forth, are one third of that, approximately. So if you look at public equity markets, they're actually net investment negative. They extract capital. They don't. They don't provide capital. They extract capital. And if that's the case, and they're purely trading markets, then we could simply decide anything should drive the stock price. In other words, there's absolutely nothing sacred about quarterly earnings growth. That's just a story. It was a myth, right? That came from the Chicago School of Neoliberal Economics, out of the 40s, 50s, 60s, 70s. But it's just a story. It's most of the assumptions around kind of neoliberal economics and shareholder primacy capitalism and neoclassical economics have been debunked, right? Like the assumptions about human behavior, economic man, that you're just yourself, it's selfish interest, and you're going to drive your feather. Most of that's been debunked. The whole field of behavioral economics has shown that's not how people are wired. Yeah, sure, there is a selfish gene in all of us, but we're also wired to cooperate, right, and be part of communities. And so most of the assumptions about economic man have been debunked, but yet they still are the underpinning of most of the theories that drive things like how we manage companies or how the stock market should behave and so forth. So it's time for us to kind of mature past all that, kind of those sort of theories about agency theory and efficient markets all been debunked, right? The idea that stock price contains full information so that the stock price is the best indicator of societal value, that was the efficient markets hypothesis, has been fully debunked, right? That there's information asymmetries, that some people know more than others, that some people just make bad assumptions, and that's why people make money in the stock market. If the share price had all full information, then nobody would ever make any money, right? Because the full information will already be in the stock. And so is a tautology. It makes absolutely no sense. So most of those things have been debunked. So we stand here today where, why are we still living by those stories, that quarterly earnings growth should be the driver? Well, it's because most people on Wall Street and in consulting firms have been trained in business schools, And MBA programs have been preaching this for the last 40 years because they preach market fundamentalism and shareholder primacy. And as long as we keep doing that, I say that as a 40-year business school professor, as long as we keep churning out graduates that have been brainwashed with that, we get what we deserve. They're going to perpetuate it. But it's just simply a story. It's a narrative. It's a myth. We can change the myth. It could be, we could decide that anything should be the driver of stock price. Why shouldn't it be reinvestment rate rather than quarterly earnings growth? Why shouldn't it be living wage for workers, not just quarterly earnings growth? It could be anything we want it to be.
It could be. It could even be environmental impact and societal impact.
Absolutely. It could be reduction in scope 3 footprint. Would be one of the drivers of share price. We
But
could simply decide.
there's another side that right now is fighting against that possibility, which actually gives me hope that that change is forthcoming. Maybe you disagree, maybe you don't. I don't know. But when I look at the aggressive attack against public investment in companies that view fossil fuels in a certain way, right? Nebulous kind of things like in Texas, et cetera, or in other areas where public funds can't invest in somebody who uses specific language against fossil fuels or is environmentally trying to be sustainable or green, or et cetera. That to me, there wouldn't be a fight against something unless it had a real possibility of taking hold, right?
Oh,
Why
exactly.
fight against something you're not threatened by, right?
Exactly right. Exactly right. What's really interesting there is, I think it was Gandhi who said, that, kind of first they ignore us, then they laugh at us, then they fight us, then we win.
That's pretty much it, right?
And I think that's kind of what's going on here. I think it's an indicator of sort of a last gasp of a dying system.
Yeah, so we were talking about you talk about Gandhi. First they ignore us, then they laugh at us, then they fight us, then we win, right?
Yeah, yeah.
And we're talking about the current situation right now with there's fights against public entities inviting or investing in companies that are profess or are trying to be sustainable. Really, there's no real guideline to them. I mean, one thing that I can point to is fossil fuel, right?
Right. And it's, I mean, I think it's interesting because it's entirely self-defeating
Right.
in the even just the intermediate term, right? And it's really interesting because what's going on now, there's an emerging movement of what's called shareholder commons,
Okay.
which I think is very interesting. And then, sort of on the academic side, is the idea of moving beyond modern portfolio theory. That modern portfolio theory of investing kind of comes from what, like the 70s kind of time frame, 60s, 70s time frame, where, or maybe it's the 50s, but it's, goes back to the kind of post-war years. The idea being that, as an investor or as an investment manager, you want to diversify risk, right? So you hold a diversified portfolio of stocks, you kind of like own the economy, and you can diversify idiosyncratic risk that way, which would be kind of the quirks of individual companies. And there is a thing called systemic risk, but according to modern portfolio theory, there's really nothing we can do about that. So the best we can do is diversify idiosyncratic risk, and that way we can, in terms of portfolio management, we get the best possible returns to the portfolio that way.
Yeah.
What's happening now is that, kind of growing numbers of people are coming to recognize that, well, like maybe like 70, 60, 70 years ago, the systemic risks, you could just say, well, they're there, but we can't do anything about them. But today they're probably the main event. Systemic risks are far bigger factors in determining what the value of a company is going to be than the idiosyncratic risks associated with that individual company. What do I mean by that? Well, uh, things like climate change, or antimicrobial resistance, or financial meltdowns, financial bubbles and meltdowns and financial crises. These are systemic risks, and the impacts that they have on people's wealth are far greater than the foibles of any individual company. So it's really systemic risks that are the name of the game. And increasingly, investors, smart investors, are saying, well, we need to manage for those, right? That's really what a smart investor does. So we need to get beyond modern portfolio theory. Like, for example, there's a guy named Rick Alexander who was actually he's a lawyer and was one of the founders of the whole benefit corporation movement, like 20 years ago. And that's an important, I think that was an important kind of new legal structure where you could incorporate where the purpose of the company is for benefit and so forth. But I think he realized that that alone probably wasn't going to get us there, that it was really the more system level issues that were crucial. And so he started this. He has a new initiative, an NGO called Shareholder Commons, and it's premised on kind of the following thought experiment. So imagine company X, right, kind of run by a CEO, and that CEO undertakes a set of strategies and makes investments such that it increases the shareholder value, drives up profits in the short term, and increases the shareholder value by, let's say, $1 of that company. Uh, and so, governed by the logic of traditional thinking about maximizing profits and shareholder wealth, the company should adopt that strategy, and all companies should adopt that strategy. But now think of yourself as being in the position of a portfolio manager, right? A wealth manager, a money manager, an asset manager. Well, your investors typically are owned, because of modern portfolio theory, they own a diversified portfolio of stocks, not just individual companies. They own, in essence, kind of a version of the whole economy. And if that very same company where the CEO made the decision, a strategy decision with investments that drove up that company's stock price by $1, drove up profits and the stock price by $1, but it had the effect of creating negative externalities out in the world such that it impacted four other companies in the portfolio and caused them to lose money and decrease their stock price by a total of $4. Isn't that a bad strategy move? Even if you're the CEO of a single company and your purpose presumably is to maximize shareholder value, you're not maximizing shareholder value because your shareholders, the people that own your company stock, own a lot of other company stocks too. So your move actually is decreasing their wealth.
Uh,
So shouldn't you, as a CEO, let alone an investment manager, be thinking about the larger systemic impacts of your moves?
gotcha. That's a really so that's a concept that's never been out there before.
It's out there now.
It is. That's part of the. I mean, is that the next era we go into? Is shareholder commons?
I think so. And it makes perfect sense when you think about it. I mean, it's and scope 3 reporting, when you think of it in those terms, scope 3 reporting enables that, right? Because it will, for the first time require, so for your listeners that don't know the Corporate Sustainability Reporting Directive, the
Yeah,
CSRD,
please.
it's an EU law, right, that requires corporations of a certain size, but pretty much any company that does any meaningful business in Europe, it requires them to report their double materiality impacts. What does that mean? Well, materiality always used to mean in the finance world, what are the impacts that things out in the world, what are the impacts that those have on your stock price and on your company? That's material. That's financially material. That's single materiality. Double materiality then says, yes, that, right? And the truth is that most ESG funds, investment funds, are single materiality oriented, right? They only look at the impact that climate change has on the current asset base, and kind of strategies of the company as it's currently configured. That's a single materiality fund, right? It doesn't look at the impact that the company has on the world, right? It looks at the impact that the world has on the company. But double materiality says, and this is what the CSRD requires, that you report not only single materiality, but double materiality. And double materiality is the impact that you as a company have on the world. And it requires that you report it scope 3, which is not just the impact of your facilities and your operations, but rather your entire value chain, upstream, all of your raw materials, how do you get them, where do they come from, downstream, what are the impacts of your products and services on the world, and what happens to your products if there are physical products at the end of their useful life.
Right.
That's scope 3 reporting. That's now mandatory if you do any sort of meaningful business in Europe as a corporation.
And that
And
scope three,
that's scope 3.
well, yeah, no, I agree, but it was that scope three now is primarily thought of or defined as like GHG or carbon emissions, right?
Well, I think scope 3 as a term of art came out of the greenhouse gas protocol world.
Right.
But
Is it
scope
slow? Is
3,
it incorporating more than just
yeah,
that
scope
now?
3,
Okay.
scope 3 conceptually really is full life cycle impact reporting.
Okay, so it's not just scope three is not just when because when you talk about it, especially like the industry. So I'm still very much 34 years in logistics, so it's still something I pay attention to quite a bit.
Yeah,
Scope three is purely emissions in
purely
that thought
greenhouse gas
process.
emissions.
And it's just GHGs, right? I
Right.
mean, they don't worry even about NOx, which is like far worse for society in the short term than like GHGs, right? Um,
At least regionally, yeah.
yeah,
Yeah.
regionally, right.
Yeah. No, this includes the larger kind of palette of the larger impact palette, not just greenhouse gas emissions. So it's really life cycle reporting.
Yeah, the whole way through it. So when you start looking at that and the impacts that it does have, um, the U.S. economy is behind, right? Because we're not adopting these as
The
fast.
SEC was sort of bullied into backing down on doing that.
Right. Yeah, exactly. Exactly. I mean, it doesn't. But does that put the U.S. economy at a disadvantage,
Maybe at some level, culturally, for sure, or business ethic wise, for sure.
or
But
does it matter? Because even like so, for
that's
instance,
what I was about to say. Because if you're a
yeah,
company of any size and you do business in Europe or California, because California also requires scope 3 reporting, then it really doesn't matter
yeah. So what's is this the losing? What? Why the fight? I mean,
because it's a culture war.
I get it, but I mean, to me, it is it's such an illogical argument in my
Yes,
mind
it is.
that I can't conceive of how to fight the other side.
Well,
And
it's ultimately a losing argument on every front,
I
including
mean, this is like
financial
one of
issues.
those subjects, and there's very few where if you put me in a debate and said, "Okay, here's your side," I just say, "Look, I lose," because I can't argue that. I mean, it's
No,
such a
it makes
illogical
absolutely no
argument.
sense.
It makes none at all. I mean,
No.
even if you break it down to purely the very base discussion, if you were to see or someone were to very base describe what we've been talking about for the last hour plus, if you break it down just to the business management of your company, just the management of the operations of your company, the sustainability, the movement that we have right now is in my mind such a basic business operations 101 concept that I can't believe that we ever got away from it. Um, it just doesn't make any sense to me. Extract, throw away, use, throw away. It just doesn't make any sense. And to not look at every aspect of your business, whether it be human assets or your raw material and the supply chain up and down, which should be circular, how to eliminate inefficiencies and uplift those assets within it to make them more efficient and more reliable and more sustainable. How is that not just the way you should be running a company?
Well, you have no debate with me.
No, I know I'm preaching to the choir, so to speak,
Yeah,
right? It's
yeah, yeah,
um,
yeah.
it's
I mean, I
just
think
interesting to me that there's a fight.
it's inevitable that that's where we end up. That's why I say that we're in another one of those periods,
Yeah, huge
of kind of
opportunity.
yeah, and that we're stuck right now in kind of an interregnum. Like a lot of people say, well, we're at an inflection point, but we're not at an inflection point yet. because we're stuck, right, in some ways,
Right.
because if you think about the last 40, the era of what I call shareholder primacy capitalism, there was convergence between the political order and the economic order, in the sense that you had, beginning with Reagan, a neoliberal political order, which was, a policy regime of privatization, deregulation, globalization, hot money, and so forth, taking capital controls off, and that played directly into the economic order, which was shareholder primacy, right?
Yeah.
Which
Yeah.
was primarily quarterly earnings growth and short-term profit maximization.
Hmm.
Those two things went hand in hand, hand in
Yeah.
glove. Well, the neoliberal political order sort of fell apart after the Great Recession. I mean, in some ways, Obama was the last neoliberal president. So neoliberal era started in earnest with Reagan, right? Because you think about it, the wealth era of capitalism, welfare capitalism, extended all the way up through Nixon
Yeah.
and and uh, and Carter. Uh, in that it was still sort of the reverberation of the New Deal.
Hmm.
Like Eisenhower was a Republican, but he's the one who instituted the interstate highway system. I mean, that's big government investment, right? Or
Oh yeah. Yeah.
Nixon created the Environmental Protection Agency and passed the Clean Air and Water Acts. So that those Republicans were still very much under the political regime of the New Deal.
Hmm.
Just like Clinton and Obama, while Democrats were operating within the neoliberal regime. They were more left, but they were still within the neoliberal era. But that all fell apart with the Great Recession, right? Kind of post Obama. And because Trump, sure as heck, in his first term was no neoliberal,
No.
and,
Yeah. 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 Yeah.
and Biden sure was not a neoliberal. Look at the massive public investments that got made over the last 4 years. That's neo-statism, right? And whatever Trump becomes is certainly not neoliberal, right? So we're at a point where the neoliberal political regime has withered away, and we don't even know exactly what comes next there. Uh, I mean, we're living it right now. We'll see.
Yeah. Yeah. We'll
But
see
on
what
the
happens.
economic regime side, order side, we're still dominated by shareholder primacy. So we're sort of stuck right now. That's why I say we're in more of an interregnum than we are an inflection point. But I view it as being almost inevitable that at some point there is an inflection point that tips everything in this direction we've been talking about. It's
Yeah.
inevitable.
Yeah. It really is. It's. Are there things that can be done, in your opinion, to push it forward? Or are we doing, or are those things kind of at their max right now without you know uh, creating a slippery slope, so to speak?
I sort of thought maybe we had already had enough crises to open, because I think it was Milton Friedman, who said back in like 1972, right, that it takes a crisis to bring about real change,
Yeah.
right?
Right. Exactly.
And
Sure.
when the crisis comes, the actions that get taken depend on ideas already laying around. That
Sure.
was a Friedman saying, and he was right.
Right.
So they
He's
were
right.
ready, right? The neoliberals in the 70s came with a set of ideas already fully formed, and when the crisis came, they were ready, and that's what brought us the neoliberal and shareholder primacy era. We're at a similar point now, only in the reverse, right?
Right.
So I think we have a lot of ideas fully formed already. For the last 30 years, the sustainable business movement and, kind of, and even on the kind of political economy side, there's plenty of ideas there. The question is, how big does the crisis have to be to create the opening? And
Well, it has to change. Does it have to change the concept, like we talked about before, the power concept of those that can really
I think
drive
so.
drive that change?
I think so. And that maybe we just haven't been pushed far enough yet to realize
Yeah.
that.
Right.
Maybe that's what's to come.
Because it's a pride thing, right? I mean, a lot of it is a pride, and I think there's a lot of realization that maybe we've been doing this wrong in certain, and we need to make the change. But there's that kind of prideful. Well, I don't want to be proven wrong, and so how do I figure out how to change things in the meantime without being having to go, yeah, you're right, I was wrong,
So
or
I become increasingly convinced that a critical leverage point for all this is is in the business sector, right? It's business leaders need to step up to the plate on this, right? Because it's not clear to me that it's going to be driven by the political order at this point. And I don't know. I mean, civil society has always been there and has become increasingly strong, but I don't think civil society can be the force that really pushes it over the top. So, I take the view that it really needs to be business leaders that step up to the plate on this. And that means, like in my book, I talk about the idea of corporate transformation and kind of strategies needing to encompass bigger thinking than, so we have the idea of like scope one and two logic, right? Which was
Mhm.
like the original ideas that brought us sustainable business back in the 90s was eco-efficiency.
Right.
The idea that, well, hey, like in our factories and in our facilities, we can reduce emissions. We can, reduce kind of belching smokestacks and stuff we dump in the river. And that actually can save us money, right? By not making the mess and then being forced to clean it up.
Right.
That's actually cheaper than making the mess and paying to clean it up.
And at the same time, if you market it correctly, you can actually gain market share.
You can do that. So eco efficiency reduced cost and risk, and that's what gave it traction. That's how 30 some years ago I was able to start a dual degree program in Michigan called the Corporate Environmental Management Program. It's what made it relevant in business schools and caused companies to push for it. It was kind of the what we would think of as scope one and two logic today, kind of eco efficiency.
Yeah.
And it was the original concept of externalities 100 years ago, right? The 100 years ago, the concept of externalities, put forward by Arthur Pigou in his book Welfare Economics, was mainly about kind of the first industrial revolution era belching smokestacks and muddy streets, and poor working conditions and so forth. And his thought was, well, we deal with that by taxing companies and force them to quote internalize their externalities.
Yeah.
We're still sort of dominated by the logic of internalizing externalities when it comes to externalities. The problem is that externalities, the scale and scope of externalities has mushroomed in the ensuing century, over the ensuing century, and metastasized to the point now where externalities are regional, national, or even global in scope, right? That think of climate change
Mm.
is really the result of externalizing things, right? Like it's lots of actors spewing carbon dioxide into the atmosphere through a variety of different means, producing this massive externality called climate change.
Mhm.
Well, it's going to be pretty hard to, yes, we have the idea of the carbon tax and so forth, but we haven't been able to make that stick yet at the global level.
Right.
So maybe we need to begin to rethink the whole idea of externalities because they become much bigger in scope and much more interconnected, like the idea of climate justice, right? Or inequality being an externality. We talked about antimicrobial resistance. Like, think of that for a minute, right? Like, overuse of antibiotics, the negative impact that could have, right? If we end up with basically bacteria that where antibiotics don't work anymore, we're back to the 18th century again, right? And
Yeah. Yeah.
with mass mortality, and just think about that for a minute. The scale and scope of that as a negative externality, the impact it would have on the economy, it'd be trillions of dollars lost, right? And millions of lives lost. I mean, just the scale and scope of that is so vast
Yeah. I
that
mean, at
maybe
a
we need
time
to
when
rethink.
depopulation is already occurring, right?
Yeah. So maybe as business people, we need to, it's increasingly, I think, as business people, we have to step up to the logic that we need to be bigger thinkers and take on bigger challenges, certainly than just scope one and two. So we have scope three now where we're thinking about our whole value chain. And that's important. And I talk about that in my book as having business aspirations, right? Not just sustainability goals. Because so many sustainability goals are basically scope one and two. They're
Right.
about energy use and water use and greenhouse gas emissions from our facilities and so forth.
Sure.
That's all scope one and two, but yet the business side, and I'm a strategy professor, right? We haven't yet brought the commercial side of most companies into this thinking where we embed it in the business, where sustainability becomes the business. Like a company like Interface, which has been committed to this for a long time, now over the last few years has stepped up to the plate that okay, yeah, the goal is zero when it comes to facility emissions and so forth, but Now we're gonna embark on a whole new strategy, which is we're going to love carbon. What does that mean? It means that Interface has committed to a set of products, flooring products and carpet products that actually sequester carbon net,
Yeah.
right? That sequester more carbon than it uses across the whole
Right.
life cycle.
Right.
So
Carbon negative.
that's actually embedding sustainability in the business aspiration.
And that's where the blue ocean really lies, right? I mean, I
Exactly.
see it as a huge blue ocean of opportunity that if you
Huge
look
blue
at
ocean
it
of
from
opportunity.
that lens, we could correct so many things with an economic boom.
Exactly. So that's I think of as having business aspirations. But then the third level, what I talk about in the book, is the idea of corporate quest. That increasingly, as business leaders, we need to step up to the plate to the larger systemic challenges that block us, that slow us down, that create constraints to the kinds of aspirations that we're talking about right now. Right? That we have to become leaders of larger systemic change to address those kinds of systemic, sort of bottlenecks, constraints, and impacts that exist out there in the world that hold us back from being able to realize this larger vision of what business could be. I've actually gotten involved with an old colleague of mine, a business founder and CEO, a guy named Fred Keller, Cascade Engineering Company in Grand Rapids, Michigan. He and I have started this initiative called Bringing the World Inside. And that's the idea behind it. Can we begin to build a movement of business leaders and academics and others, a learning system, an inquiring system where it's not answer based. We're not saying you have to do this is the answer, but rather, can we together sort of think through what needs to change if we're going to be able to get after these global scale externalities? How are we going to come to address them? And what are the roles that business leaders have to begin to take on in order to do that?
Yeah. What do you have to look at it from a financial side for an investment side first? Like you talked about the different motivations as to what why how do we value a company, right? Like you're talking about, earnings per share, et cetera. And then we talk about, okay, so scope three emissions is a value, or societal values, or environmental values, and that type of thing, right? So if you is one of the motivations or a key motivation financial? Is it investment? Do you create an investment um, or financial instrument that somehow grades and rewards the type of activity and thinking and strategy that you're trying to promote?
I think it's crucial. As we talked about a little bit earlier, right? The idea that we can redefine the meaning of value, and that's ultimately what has to happen, right? That there's
That's the
nothing,
catalyst, right?
yeah,
That's
there's
the
nothing
catalyst.
sacred about quarterly earnings. This obsession with quarterly earnings growth as the driver of stock price. I mean, there's it's a story, right? I mean, we can choose to write a new story that have a different set of drivers of value, that we can redefine the meaning of value. And I think it's critically important. And it's kind of interesting that, private equity takes a lot of abuse, and it probably deserves it from at least past behavior, right? In terms of what private equity has done over the past 30 years or so, in terms of, kind of, hostile takeovers and, company breakups. And so, and even some of the current behavior. But I see what's going on in the private equity world. There's some really interesting things happening, right? Because private equity can just decide to change, right? It's private, whereas public companies are still under the thumb of Wall Street and so forth. But private equity, as an institution, can look to just change its act, right? And
Yeah.
you see some signs of that beginning to happen, where private equity firms are really beginning to look at the larger kind of scope three, beginning to look how do they manage their portfolio companies in a fundamentally different way, or even change their basis for making decisions about who to invest in. I see some signs of that beginning to happen, and that could be potentially really exciting, because I think private companies in general, not just those owned by private equity, but privately held companies in general, are the leverage point. They're not hamstrung by Wall Street. They can lead, and there's some big privately held companies. In fact, the vast majority of corporations earning over 100 million a year in revenue, like 90% or so, are privately held. So I think privately held corporations and the leaders of privately held corporations are in a leverage point position to become drivers of this new way of thinking.
That's fantastic. So, Stuart, we've gone through, in my mind, the whole progression up to what needs to happen moving forward. Do you have any further points to leave the audience with right now?
Yeah,
Besides, go buy this book because it's fantastic.
I mentioned a little earlier, kind of key leverage points, when it comes to
Yeah.
this sort of very, I think somewhat, how should we say, somewhat intimidating sounding term, system change.
Mm.
I think that term is intimidates people and maybe sounds ideological at some
Mm-hmm.
level, like maybe like dates back to the 60s or something. I don't know. But,
Yeah.
I think we need to kind of bring that alive more. And so I try to in the book where I think about in the through the lens of business and the idea of having a larger quest as a company. Well, they're think of it as a tree, right? That the canopy of the tree uh, has fruits and branches and it's always growing, it's protein and so forth. Uh, that's kind of like the issues out there in the world, kind of there's deforestation is a problem and climate change is a problem and modern slavery is a problem. So there's always new issues popping up, right? And as a business leader, if you choose to address the kind of system level concerns only in the canopy, it's a little bit like whack-a-mole. There's a new one constantly popping up and there's going to be pressure on you to take a position and maybe you get out ahead of your skis and then you get negative PR and so forth. So the
it's
so
like
the can't
it's like pruning a ficus in Miami
yes,
outside.
exactly.
You
So
cut it
just
and you'll see it
playing
grow right there.
yeah, so as a business leader, just playing in the canopy when it comes to these system level concerns can be kind of daunting and you probably can't stay ahead of it.
Right.
So there's the trunk of the tree, right, which is more enduring, right? And the trunk I would think of as kind of the policy regimes and the subsidies and so forth. And that's where, kind of former Unilever CEO Paul Pullman talks about business leaders becoming net positive advocates, or my colleague here at Michigan, Tom Lyon, has started this initiative called uh, corporate political responsibility, where you look as a company to align your stated sustainability goals and strategies with lobbying, right? That companies shouldn't be talking out of both sides of their mouth. You shouldn't say, I have this net zero, sustainability goal, but then you're lobbying, with 10 times more money to prevent it from happening.
Yeah,
So,
exactly.
so those kind of things. So to become a net positive policy advocate, that because policies are determinative of the canopy, right? So that's a more enduring way to go about it. And I think actually that Paul Pullman and Andrew Winston do a great job of addressing that sort of thing in their book Net Positive. What I try to focus on in Beyond Shareholder Primacy is the root system. And the root system of the tree, I think of as kind of the institutions that define and enable capitalism in the first place. And one of them we've already talked about, which is the financial infrastructure and the public equity markets in particular, as a leverage point for change. And it absolutely is. We can redefine the meaning of value. The other is business education, and I mentioned it briefly before. I say that as someone who's been a professor in a business school for 40 years, so I'm complicit. But the MBA as we know it has to be creatively destroyed because it's still, MBA programs were redefined and taken over in the 80s with the emergence of shareholder primacy. And they've been the same ever since. Now, I say that as someone who's been involved in creating sustainable business, programs, centers, dual degrees, and so forth at places like Michigan and UNC and Cornell, and then most recently a completely new MBA program at the University of Vermont, a clean sheet redesign called the Sustainable Innovation MBA, which I think is actually a really important innovation and is the direction we need to head. But most business schools haven't done that. They've mostly just they put on what my colleague Sanjay Sharma and I call saddlebags of sustainability. Exactly what I've done for, previous to the Vermont program, which are sustainable business centers and institutes, uh, uh, concentrations of second year electives, but the core stays the same. It's been the same as it has since the 80s, and it's the core that ends up really sort of brainwashing the MBA student.
Got you.
So they get that's the entire first year of the 2-year MBA is the core curriculum. So as long as the core curriculum stays the way it is, we are churning hundreds of thousands of people out, unleashing them on the world every year, and they're the ones that run they run Wall Street. They're the analysts. They're the ones, in the investment firms. They're in the consulting firms. So as long as that happens, we're not going to see the sort of new story emerge. So it's incumbent upon us to redefine and reinvent business education for the 21st century. And we begin to see some signs of that. That's certainly my personal mission for me. But business education, just like shareholder primacy, is a system, right? In other words, the MBA is a system, right? It depends on recruiters behaving in a certain way, depends on those that rank and rate business schools, kind of measuring certain things like starting salary after finishing the degree. That, as long as that's the metric, then it's going to be, that's a system that needs to be changed too. So, like the FT has begun to look to change the way they rank business schools. That's important. That there's more innovation where we're creating entirely new MBA programs, not just having second year electives like the Vermont program that I mentioned. That's important. But overall, I think reinventing business education is crucially important if we're going to create the sort of new story and new mindset that we've been talking about.
Yeah, agreed, agreed. Again, as you explain it, though, is that is key. And then you say, however, the ranking of those schools and how we value them comes back. So redefining the value of the business school
Exactly.
is part of that issue too.
Business
And
schools have swung, just like we've talked about capitalism having these wild
yeah,
swings.
do
Business
you?
schools have had similar wild swings going from times when, like, they started where there was a strong kind of ethical component.
Sure.
Then they swing where they're just job factories
Right.
with very little underlying kind of
Yeah,
educational content, where they're
yeah.
just people get their ticket punched to get a job. We're in one of those times now where business schools are seen as job factories. It has to swing back again, where business education is what my colleague at
What?
Michigan, Andrew Hoffman, calls a
Yeah.
calling. Management as
Isn't
a
it? Isn't
calling.
it a reintroduction of values
Yeah,
into the business, right?
yeah,
As
exactly.
yeah, that
Exactly.
I
That
mean,
business, it needs to be business education, not just functional training.
yeah, 100%. I keep thinking to myself, wow, you're kind of not to blow smoke or to downgrade downgrade anybody, but I've read papers by that caused Ralph Waldo Emerson to be disinvited to Harvard. And it sounds like a speech you just gave that would be like, huh, do we want him back to give another another commencement speech? I mean, because it's radical thinking, man. I mean, you're changing the system, and I applaud it 100%, and I mean it in the most complimentary way. Is that this is a movement that I agree 100% needs to
As I
happen.
thought about, it's interesting because I think I know quite a few business school deans.
Yeah,
And, just like with CEOs, when you talk to them privately, they'll say that things are really messed up. This
yeah,
kind of shareholder primacy is bad for companies. It's bad for
sure,
they'll, they know it, right?
yeah,
And then
they
it
know it.
shackles them. They know a lot of business school deans know it's messed up too, and they
You,
know it
you
has
just
to
got to
change.
find where's the comfortable catalyst that everybody can
Right.
embrace, right? That's what it is, right?
Yep.
That's what you're saying.
And increasingly, I think it is the business leaders themselves that have to step up to this, right? That
Yeah.
there's ingrained systems of recruiting that are just, there's inertia behind them. They're really they're about placement factories into executional jobs that perpetuate the status quo. And you want to maximize the starting salary because the students in the MBA programs need that because they have to service their debt after they pay a lot of tuition. I mean, it's a system. It's a system, and it's changeable, right? It's changeable, and the MBA students themselves are becoming increasingly the Gen Z MBA student doesn't really value what's being delivered now.
And that's what I was going to say. Isn't I mean, there's all kinds of different drivers, there's many different inputs into how a society evolves and changes, and why, and the impacts to those different, or the crises that cause change have to happen to the right combination of inputs in order to make that change occur.
Yeah,
And one of those things that's not really, when you think crises, you think instant, like boom. I was at a conference in Miami with 35,000 people on March the 4th. On the 5th, we were shut down for COVID. I mean, the next day it was illegal, right? And that's what people think of as crises. But isn't the new the new wave, the Gen Z, whatever you want to call it, isn't that a long term kind of
yeah.
crisis that's
It's a
kind of
it's a
building it
rolling
and pushing
crisis,
it? Yeah, I mean,
right?
it's a
It's a rolling
positive.
crisis.
It's yeah, right, exactly. It's a
You
slow
see it
burn.
in reflected. You see it reflected in the fact that longer term, like since the Great Recession, the long term trend of applications to traditional 2 year MBA programs have been down.
Yeah.
There have been years where they're up, right? It's bumpy, but the long term trend is downward, right? That the
Mm,
traditional 2 year MBA is a
mm,
declining category.
mm,
And deans know that, right? Now
mm.
it's impacting the second tier business schools first.
Yeah.
So their MBA programs shutting down, right, in the second tier, like
Yeah.
the top 20 or top 50 business schools according to the current rankings aren't going to be hurt directly. They're not in danger of shutting down anytime soon. But second and third tier programs are, right, and it's happening
Yeah.
now. So a lot of the deans of those schools, and I'm talking to several of them, know that it's change or die right
Yeah.
now, right now,
Yeah.
and they're
Well,
motivated to
there's free
do the
market
sort of.
dynamics at work right there, right?
Yeah, it's sort of Clayton Christensen disruptive innovation, right? That
Yeah,
a lot of the
exactly.
disruptive changes happening in the second tier schools first, and you'd sort of predict that.
Yeah, sure. Yeah, absolutely. That's fantastic stuff. Listen, everybody, I want to thank you all for downloading this. Hopefully, you learned a lot. I've got to go back and listen to this several more times because I there's so much in here. Stuart, I really appreciate you coming on. Beyond Shareholder Primacy, Remaking Capitalism for a Sustainable Future is the book, and they can grab it just about anywhere, right?
Yeah, it's on Amazon, or you can buy it directly from Stanford Business Books as well,
There
Stanford
you go.
University Press.
There you go. And also, Capitalism at the Crossroads, I would believe, was the predecessor, right?
Yep,
Check them
indeed.
both out. They're fantastic. And Stuart, thank you so much for coming on, my friend.
Absolutely my pleasure. Thank you, Michael.
I hope you have a wonderful Christmas and a wonderful New Year, and we'll catch up and talk more as it goes. I have a feeling that there's going to be a lot of demand to hear more from you on the podcast, and I certainly would enjoy that quite a bit. I enjoyed our conversation quite a bit. Thank you very
I
much.
appreciate that.
Right on.
Happy holidays
Uh,
to you.
Amen. Amen. Everybody, thank you so much for tuning in, downloading the Sustainiacs. Until next time, I'm Mike Vincent. Peace and love.